Good afternoon. Thank you for joining us, making us part of your day once again here on Market Talk for this Tuesday, March 22nd. I'm your host, Jesse Allen. Again, thank you for joining us. Find us on our website, markettalkag.com. We have all of our social media links there, the latest streaming sources, news of agriculture, much more. It's all online, markettalkag.com. Well, we had another interesting day throughout the ag trade. We saw a fairly quiet day after some early moves, but we got plenty to discuss here. Was it without some interesting things to look at? Let's bring in our good friend Jim McCormick with agmarket.net to join us here today. Jim, good afternoon to you, sir. And we were talking a little bit before we went on air how this kind of felt like a day of old. It was kind of quiet after some early moves. It was kind of nice, wasn't it?
No doubt about it, Jesse. Thanks for having me on. The volume was definitely down again, and it does have a feeling of pre-Ukraine violence. No doubt about it. I know our phones here at agmarket.net were relatively quiet. It does feel like a lot of the producers have kind of sold the grain they wanted to sell at this point in time. The market participants have maybe digested the Ukrainian crisis at this point, and now we're waiting for the next move of what happens. And it just, definitely had kind of a lackluster kind of trade, at least compared to the frenetic pace it's been the last couple of weeks.
Yeah, it gave us maybe a little bit of an opportunity to slow down and pause and just take a breather, but we weren't short on interesting things in the markets today, though. I mean, wheat was sharply higher again overnight. We backed well off that, and corn as well. We kind of just unwound some spreads here today. It looked like. What did you see that caused a little bit of this spread unwinding possibly here today in corn and wheat?
Well, if I've got to make a guess, I didn't see anything specific headline wise, Jesse, but it really feels like what was going on is we've played a lot of the emotion of the Ukraine situation now. And now there's going to be a little bit of a debate. How many acres may they get planted for the corn? Well, the reality is the Ukraine, for the most part, plants on the same cycle as the United States. So we're really not going to have that answer probably till late April, maybe even the end of May. So it seemed like a lot of these funds who might have been in the front month May corn and even July corn, the May wheat and the July wheat, they kind of rotating out of those. So they're getting out of the spot month and moving it back to the back months, to the December contract. An interesting note that we noticed on the December corn today, at one time today, the $10 corn call was trading 2.5, 3 cents higher compared to where it settled at last night, while the December corn futures, the baseline of the contract, was trading 2.5 to 3 cents higher. So there's definitely a sign that there's some long-term bulls that are still out there trying to play it, but they're going out to the longer-term game. It looks like buying a little bit of the discount as well.
Well, and just with a little bit of that profit taking today, and a little bit of unwinding, it is an interesting note. You mentioned kind of playing that longer term game, and also you mentioned how it feels like maybe farmers have made some of their sales. They've sold what they wanted to sell at this point. Do you think maybe now we could start to settle into a range in corn and wheat, or do you think it's just there's too much volatility out there to really think about that right now?
Well, I think you could argue we are going to settle into a range. I mean, essentially, at this point, we haven't, at least the spot months haven't taken out that kind of the war night, the day pretty much the war started high, then we had a really hard break the next day. We've been in that range for the last couple of weeks, and maybe we're going to stay in this more sideways range. I can't see the market really falling out of bed, because the reality is we've got a big acreage report here at the end of next week. That's going to really kind of set the tone. Is it 90, 91 million acres? Or is it 92, 93, like some groups think? That's going to set the tone. And then the Ukraine. The fact is they produce on a normal year somewhere around 40 million metric tons of corn. 80% of that crop roughly gets exported. How much of that crop's going to get planted this year, folks? Is it 10%, 20, 50? Everyone's got to guess, but the reality is none of us know. Then on top of it, you've got about 15 million metric tons of corn that's been sold to the Ukrainians have sold. They have yet to deliver, with 6 million metric tons of that going to the Chinese. So, if you're an end user, I got to believe you're going to see some weakness to step in and buy, because the uncertainty is still quite high. And the fact of the matter is, you look at the uncertainty, I'd say the crop's going to get smaller instead of larger. And when you look at the world stocks, when you exclude China out of the equation, there's some of the tightest world wheat and corn stocks that we've seen in the last 20 years. So, the pressure's on to have a big crop, especially with these lost acres potentially coming out of the Ukraine.
Well, speaking of lost acres as well, not only Ukraine soy oil, canola oil there, but also the tighter soybean crop in South America. Soybeans were kind of the strength of the market here today. What did you see over on the soybean side of things on Tuesday, Jim?
Well, I think, like you said, I think you nailed it the best, Jesse. The reality is, the Ukraine is one of the biggest soy oil producers in the world right now. They're not going to be able to get sunflower seeds planted. That's a big problem. You got this crop getting smaller in Brazil. Now, we haven't had an updated number here for a couple of weeks, but harvest, I think, is around 75% harvested. So you're not seeing any shockingly surprises at this point where, people are being surprised that, wow, the crop's coming in bigger than we think. So this number is already low. It's probably going to get a little bit lower. Now you got a situation that maybe the American, the bean market's finding a little bit of support as they're trying to convince the American farmer to plant a few more beans, because you look at the corn, you look at the beans, you look at the wheat. I think these acreage numbers are still up for debate. Now, like I said, Jesse, we are going to get an acreage number from the survey done earlier in the month, but I got to believe these acres are still in flex, where some producers are still going to be making decisions at the last moment. Fertilizer is still a situation for some people where they haven't had their hands on it yet. Getting chemicals, some chemicals have not been arrived as well. So I think you could see some last minute decisions being adjusted depending on what is available for the producer across the country.
So if that happens, I wonder, how does the trade digest these USDA acreage numbers next week then? Do they take it with a grain of salt? Do the computers just trade the numbers as they are and we figure out the rest later? I mean, that's an interesting point you bring up, because that survey's done. If we make some changes here late this month, I wonder what that's going to do for things, Jim.
Well, here's what I'm going to recommend any producer out there. Whatever the number is, that's the number we're going to trade. It's kind of like think of the government or the USDA official kind of like the referee of the NCAA game. You may not like the call, but that's the call. They're going to run with it. So even if they give us a bigger number, let's say our group's thinking more like 90.7, 90.8 million acres of corn. We believe it's going to be down from a year ago due to the higher production costs as well as some of the other aspects out there. But let's say that government comes out there at 93 for some reason. The market, I'm not going to, I can't sit there and argue you need to buy corn because our number, we believe it's 91. The government says it's 93. The market's going to trade that 93 number. That's the number we'll run with till we get the updated number at the end of June. So the producers, like I said, even if you disagree with that number and it's going against what you think, the market is always right, as they say, and you're going to have to deal with whatever that number is. So our recommendation for producers right now is to consider buying options to put a decent floor under your unpriced bushels going into this number, because we just don't know. And mind you, the other aspect is we also have a quarterly grain stock number, which has had a history recently of kind of throwing some surprising numbers at us. So, there's a lot of expensive crops getting ready to be planted. Buying puts is a great way to make sure that you keep that profitability in line.
Going to be very intriguing to see what we get for those numbers at the end of the month. Jim, as well, stock market wise today had a bit of a rebound. Crude oil kind of taking a pause a little bit, kind of just trading roughly around $1 lower in the crude oil market. Any thoughts with the macro side of the picture and what we're seeing there as we get into this week?
It's a really interesting thing going on the macro front. Let's start first on the crude oil. The crude oil is, like I said, it's down a little bit right now. Now, the reality is this, folks. The U.S. is boycotting the importation of Russian oil as well as some other countries. But the fact of the matter is Russia's still pumping oil today. They're probably pumping just as much oil today as they were before the war. The difference is who they're selling it to. So instead of selling that oil to us or maybe someone in Europe, they're selling it to the Chinese. They're selling it to the Indians. We know that. So the amount of oil actually being pumped in the world is not dropped. It's just who's doing it. So the market had this initial reaction. We banned the importation of Russian oil, like, my gosh, it's going to change the market. It just changed the delivery dynamics. If you look what's going on right now, Jesse, we're actually importing more crude oil from the Saudis for the first time. Now, the reality is we have not had, or the Biden administration has not had the best of relationships with the Saudis for various reasons. But it's a situation that it could be interesting. I think could be changing, because there was reports over the weekend that the Biden administration is now selling the Saudis more of the Patriot missiles, which the Saudis have requested. So I've got to believe there's probably a different kind of tit for tat type of situation where, hey, we'll give you the Patriot missiles you need. We want you to increase your oil production. You're already hearing some talk of that. by some of the other Middle Eastern. Because the fact of the matter is, $100 crude oil, they can make money, and they've got to walk a very fine line on this crude oil. If they get this prices too high, it's going to put the world into a recession. You put the world in a recession, then all of a sudden no one's making money. So I think they're on that side of the equation. Now on the stock market, it's running pretty well higher today, and it's kind of a nice thing to see. There's reports now that Fed officials are saying, hey, they may have to raise interest rates a half a point on this next meeting. The market took it in stride because the reality is we're having, I believe, what's called a K recovery for the recovery right now. If you're in the lower half of the economic spectrum, it's very tough right now. There's no doubt about it. The high cost of fuel, the high cost of food, it is definitely beating up your bottom line, and you are stretched thin. But the reality is, if you're on the top end of the market spectrum, if, plain and simple, you own stocks, the stock market rally is a 2-year bull market rally. It's doubled. It's one of the fastest bull runs we've ever had in doubling the value. Look at the price of land values. That's gone astronomically high. It's reported right now, it's estimated, Jesse, that the U.S. consumer has $2 trillion sitting in his checking account, unspent, saved up money due to the pandemic, due to the fact we were kind of locked down roughly for 2 years. So even though we weren't locked down, people weren't going on vacation, they weren't going out to eat, they're out there spending that money. If you look at gasoline demand on Sunday, it was the strongest ever. Even at these astronomically high prices, the consumer's not backing off. Airfare, airports right now in O'Hare, I'm just outside of O'Hare, they're reporting airplane or traffic through O'Hare, one of the nation's biggest airports, was the most they've seen since the pandemic. So people are traveling. Anybody who's been down on spring break knows the beaches are full. The casinos in Vegas are full. So that, I think, is a good sign for the economy as a whole, that even though there is a subset that's definitely struggling, there is a group of people out there that are spending money, and that'll hopefully, inflation be danged. And hopefully that's a good sign. I think that also could be a very good sign for the livestock market, especially the beef sector. Now, we do know that you're seeing the higher demand right now, Jesse, for hamburger on the retail end, as, like I said, on that lower end of the economic spectrum struggling. But those people that are going out on vacation, more than likely they're going out to eat, and they're going to spend the money they've got. They've got a lot of it banked, and they're willing to spend it. They're ready to spend it. And now hopefully that's a good sign for the beef market.
Well, you led me right to where I was going to go next. That was livestock. Cattle today, Jim. We saw feeder cattle demand rise a bit as feed prices got a little bit cheaper, but then future side, we kind of just backed off as we went through the day. We'll call it more of a mixed to slightly lower trade on the futures front. But as you alluded to, that it's, we got good beef demand out there and hoping for more as people go out to eat. I mean, what's your thoughts on this cattle market as we get into the back half of March now?
I think you got to be, like I said, I'm a little bit optimistic about it. Now, like I said, there is a concern, no doubt about it. Like I said, when you're filling up $5 gasoline, $4.55, it is going to cause a certain amount of people to back off, and they've got to cut their spending somehow. So, if they're paying more for energy, they may not eat the higher cuts. But like I said, there is a group of people out there now that are continuing to spend. The other thing I think is going to work in the favor is the Q1 to Q2 production in livestock is anticipated to drop roughly 170 million pounds. That just doesn't happen. I think if that happens, it'll only be the second time in 30, 35 years that has happened. So you've got a situation potentially where the supply is going to be tightening on the beef side of the equation. And you're going to have a set of demand for certain, aspects of people going on vacation that hopefully will keep this cattle market somewhat of a bid on it. But you're going to see a lot of volatility because, one day we're going to buy, hey, people are going on vacation. Then the other day you're going to buy the higher gasoline prices. If you would start seeing that gasoline market come back down, as maybe the Saudis and U.S. start ramping up more and more production as we go into the summertime, that can only be helpful for the demand for beef, I got to believe.
Now, on the hog side of the equation, after a pretty wild day of trade Monday, hog complex just got quiet today. We just didn't seem to see pork cutouts, cash market, just didn't seem to support that big move on Monday. Is that your observation in the hog market?
That's definitely my observation right now. I think that's where it's at. The hog market, kind of the grain market, was relatively quiet. I think in the hog market, there's a lot of, the reality is there's some optimism due to some of the pain that's going on in our industry, agriculture industry right now. We've got this bird flu, that continues to cause problems. I think now there was a case in Nebraska this afternoon. So as that continues to devastate some of the poultry demand or supply, optimism is that you're going to see some of that demand come back into the pork industry as it's a little bit cheaper than beef. So hopefully that's a good sign for the pork industry. And there's also interesting enough that we've read some reports, Jesse, that they're continuing to having some problems of African swine flu in China. Now, you're not hearing many people talk about that right now. It's kind of like COVID. It kind of got moved to the back burner as the Chinese have kind of just ignored it. But the reality is it is a legit problem. And if it starts to rear its ugly head, combined with a lack of poultry production, that could be a positive demand side situation for the hog industry as well as the cattle industry.
Well, Jim, before we let you go today, any final thoughts or anything else you want to reiterate for us on this Tuesday?
The only thing I'm going to reiterate is kind of what I said early in the game. We've got a big report coming out here at the end of the month. We're encouraging producers to use options as a way to kind of manage that risk. This report is known to be very volatile type of reaction to it. You may disagree with the numbers, but the numbers we're going to trade. And then keep a very close eye on what's going on in the Ukraine. The reality is there's a lot of corn in there that, like I said, has been sold, but it's not been shipped. If they can't get it shipped, will we see that demand for China? My belief, it will be there, but that is going to be very, very volatile. Use the board as a way to mitigate that risk. Stress is very high right now. Input costs are high, but you can mitigate it, manage that risk. Just give us a call at agmarket.net. We'll be able to help you out.
And you can find them again, agmarket.net. That's going to be the best way to reach out to them, find their phone number, give them a call, and we'll be looking forward to that report coming up March 31st. We're about 12 days out from it right now. Jim McCormick with agmarket.net. We appreciate the time today on Market Talk, sir. Thanks so much, and we'll talk to you again soon.
Thank you for having me on, Jesse.
Jim McCormick with agmarket.net here today on Market Talk. That's going to do it for this Tuesday, March 22nd edition of the show. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.